Yes, so in this question, we are trying to find the net profit. In finding the income statement, income, it means we are trying to find the income of the firm. An income is not just the total revenue they get, but actually the profit you get. And what is the formula for profit in general? We have selling price minus cost price. So it means that we have to find the sales of the business and subtract the cost they incurred in making that sales from it before we get the profit. And that is what is called the income statement. So for this one for instance, when you are writing the income, always anytime you are giving an accounting question you are solving, write the name of the firm on top. It gives you a mark. Then write the topic of what you are doing. So this one like this is income statement for the year ended 31st December 2015. For income statement, you write for the year ended because you are finding the profit for just that year. For just that year. But the statement of financial position, you are finding the position of the firm as at that date. That's why the statement of financial position is as at 31st this December 2015. And the income statement is for the year ended 31st December 2015. So talking of that, we said what? The formula for profit is what? Selling price minus cost price. So we start with sales. Sales. So the revenue there's so sales. The first thing is sales. Usually I'll advise you can bring 3 columns for the Ghana cedis. When you have to add, you add from here and it goes here, or you subtract from here, goes here, because of the kind of workings we'll be doing. So first of all, sales. Sales is the first of all. So it's you can bring it to the third side. So if there is any other, you bring it under it and just solve it, so that the final solution will just be under. Other in other books, you can see that they write it in the second and bring the net sales here. It's still the same. So first one is sales. Sales. Another name for sales is revenue. Now, then, after getting your sales figure, you less return inwards. Return inwards means goods that people bought but returned to the firm. In accounting or in business, when someone buys a goods and the goods is faulty, the person is allowed to return the goods, and not just on the basis that is faulty. Maybe the goods did not meet his description, but when he bought it, you issue what? A sales. You issue a receipt to the person after the person has paid, right? You issue a note to indicate that you have sold those goods. So when the person returns it, you give the person a note to indicate that the person has returned it. Those notes we consider in the return inwards. So it means that when we talk of the sales, we come and subtract the goods people have returned from it, because those ones we've not sold them. That's why we say sales. Then we come and subtract less return inwards from it, because it's here. That's why we just write it. Anytime you see less, it means subtraction. That's why I brought the bracket here for you to know. But in the subsequent ones, I'm not going to bring the bracket. When anytime you see less, you should understand that it means subtraction. So you less return inwards from the sales, which means you are subtracting the goods people have brought. Return inwards, the firm, they are returning it into the firm. So return inwards. So you less return inwards, and what you get is your net sales. It means this is the actual sales figure. This is the actual goods you have sold, and not this. Because this one there's a content that people returned, which is this. So when you subtract it from it, this is what you actually sold, and we call it net sales. Now you've gotten your sales. Remember that the formula for profit is selling price minus cost price. So we've now tackled the sales. Now less cost of sales. This is the cost of the goods we sold. That's why we call it cost of sales. We can't just write less cost. Cost of what? Less cost of goods. It means that we are finding the cost of the goods. But this one we are trying to find the cost of the things we sold, so that we find the profits. So that we find the profit, the cost of sales. Now, what cost you to sell those things? before you even started selling, you had some of the goods from last year. You see, for this year, business accounting has a policy we call going on concern concepts. It believes that business do not last for just 1 year, but they continue for over a period of time and will continue to exist for a long period. That is what we see, that the goods you brought from last year to sell in this year, you start selling them before you even start selling the fresh ones you go and buy. And it's part of what it was inclusive in considering the goods you sold. So under the cost of sales, the first thing you consider is opening inventory. Opening inventory. In other terms, you can see opening stock or opening goods or goods assets. Then we bring the beginning of the year, the beginning of the new year. That is the same as opening inventory. And this one, you will not write it under under the sales figure, because you are coming to find the cost of sales before you come and subtract the cost of sales from the net sales figure. So it means that all your working under the cost of sales would come here, so that will come under this column, so that the final figure will actually come here, so that you subtract just the final figure from the net sales figure, because you can't come and subtract this and come. It makes your working cumbersome and difficult to comprehend. So first, we bring our opening inventory and continue with what? After your opening inventory, what again did you sell? You went to buy goods to come and sell. And just buying them too, it's not just the goods that you bought. You actually incur transport in conveying the goods to the business. So we call those one carriage inwards. So if you are talking of your purchases, you will not say that if you go to the market to buy goods worth 10 cedis, you not just come and say, oh, I'm selling it for 12 cedis because I bought it for 10 cedis. No, you consider the cost of transport, your transportation cost. And in accounting, we call those transportation costs carriage inwards. Carriage inwards. Note, we call it carriage inwards. The ones that you incur in bringing the goods into the business is called carriage inwards. When something happens and you are returning the goods, we call those ones carriage outwards. When something happens, maybe the goods is faulty, maybe the goods does not meet your description, so you are returning it back to your supplier, we call that one carriage outwards. So this one is what the cost you incur in bringing the goods to your business. It's called carriage inwards. So you add it to your purchases figure, then you get this figure. You don't directly move this figure here, because some of the goods happened not to meet your description or were faulty, or for some reason or the other, you return it. Did you buy those goods finally? No. So in calculating for your actual purchases figure, you take away the goods you returned from it. That's why we say less return outwards. You subtract your less your return outwards from this figure that you got from adding your carriage inwards to your purchases, and get your net purchases. So you see, it's actually the purchases figure we wanted, but we have to do some workings for the purchases. That's why we'll solve it under this column before we bring the figure to this column. Do you get it? Yes, that's why all the three columns are vital. All the three columns are necessary. If you are working here, you have to add something, but you have to do some workings on that before you bring it here. You do it in the previous column, then before you transfer the actual figure you want to this column. So here, like this, we want the purchases figure, but we can't just bring the purchases figure because we don't have a figure for that. We have to do some workings around it before. That's why you do them here and get your net purchases and bring it here. So moving forward, after getting your net purchases, now you subtract the goods, you add the goods you purchased to the goods that were available from the beginning of the year before you started selling. That is opening stock to your net purchases, and you get the cost of goods available. The cost of goods available now. Now, when you get the cost of goods available, which is this figure, they told us in the additional information that the proprietor withdrew some goods. So those goods were not available for sale again. He withdrew some goods from the goods that it was available. So you come and less those ones from the goods available before you get the cost of goods available for sales. You come and subtract the goods he withdrew before you come and get the cost of goods available for sales. So we call that one drawings, but I just put into bracket goods so that you'll be able to easily relate it in the additional information. So you less your drawings from the cost of goods available in order to get your what? Cost of goods available for sales. Cost of goods available for sales. More often, this one is directly cost of goods available for sales. But because of the proprietor's drawing, that's why I did it this way. And usually, anytime there is drawings of goods by the proprietor, you treat it this way. So when you subtract it from it, you get your cost of goods available for sales. But these are the goods that were available that you can sell. But did you sell all? No. If you did not sell all, how do you get the quantity you sold? You go to the shop and count the goods there as at now. Then you subtract it from the total goods you had available for sales. It will give you what? The amount of goods you actually sold. That is why we will subtract our closing inventory from the cost of goods available. So we say less closing inventory. So we come and subtract it. We come and subtract our closing inventory from the cost of goods available for sales and get what? Cost of goods sold. If you watch it, we said we are looking for what? Less cost of sales. So this is the actual cost of sales, cost of the goods we sold here. So now we can bring it here and come and work on. Now, because that is what we actually want, after we get the figure, we don't have to write it here and come and write it here again. Directly, you can bring the total here under and come and do your what? Subtraction in order to get your what? Profit. Because this is the sales, this is the cost of the sales. So you subtract the cost from the sales and get your what? Profit. That's why we call it gross profit. Sometimes there is an element we call wages. If you see only wages, it means that the wages will come before you get your gross profit. Wages is considered a direct expenditure. It's an expenditure that you cannot do away with. In working in the business, you definitely incur that expenditure before you be able to even sell. So sometimes you see that they'll write the cost of goods sold here and add wages before they come and subtract the total from the net sales. That's what they call cost of sales and come and subtract from the net sales. But here we don't have wages in the question. Wages is different from wages and salaries. They are two different things. Now, when we subtract the cost of goods sold from the net sales, we get what? Gross profit. Gross profit. Gross profit. We call it gross because we've not factored in all the elements that accounted for the sales. There are some other expenses we incurred that we have not brought in here. So we call it gross profit. After you get your gross profit, you come and subtract operating expenses. Your operating expenses. Now, your operating expenses consist of a lot of elements. That's why I brought column. That's why I brought column under it. Yes. That's why I brought column under it. Meaning that it's plenty. So I'm coming to do, and I want to subtract it from this one. So it means that if I want to subtract it from here, it means I can do the workings here in this area. Then I bring it here. If a figure that I'll bring here and I have to work on it before I have to work on that figure, I can do the workings of that figure here before I bring it here. Then finally, I transpose it here. So you look through your question one by one in order to find your expenses, operating expenses. One of them is carriage outward. Remember, I told you that carriage outward is the cost of transportation you incur in sending the goods back to your supplier. We call it carriage outwards. You bring it here. Now, depreciation on an asset, it means that you have used an asset and that it has lost its value. In accounting, we believe that so long as you are using an asset, you are incurring some cost, sort of. So if you are using the asset, you have to set aside some money periodically to show that, oh, I've used 10 cedis of this asset. If you bought it 100 cedis, maybe this year I've used 10 cedis from it. Next year I've used another 10 cedis. By the 10th year, the asset would have lost its life value. So every year I'm going to reduce it by this amount. That is what they call the percentage they gave in the question for depreciation, which is in the footnote. So we call it depreciation on furniture, which is 10% of 1,200,000 Ghana cedis, which will give us 120,000. Then administrative expense, you write it here. Electricity and water, you write it here. Traveling and transport, you write it here. Postage and stationery, you write it here. Your rent, you write it here. Then we continue to look for the expenses and we see wages and salaries. Wages and salaries. I should have just written the wages and salaries here. But in the footnote, they told me something about the wages and salaries. What is it? They said accrued wages and salaries. Accrued wages and salaries means that there were some salaries you were supposed to pay last year, but you did not pay. You did not pay. So not last year to say. You were supposed to pay some salaries this year, but you were not able to pay all. You were not able to pay all. You paid part. The ones you paid is what you have written as wages and salaries. So the ones you've not been able to pay, they call it accrued wages and salaries or outstanding wages and salaries. Sometimes they say wages and salaries outstanding or wages and salaries accrued. They are all the same thing. So you add it. It means that you incurred that cost of the wages and salaries, but you've not yet paid for it. But because you incurred it this year, you have to account for it this year. That's why you add it to the wages and salaries figure. So I wrote add accrued wages and salaries. So you add it to the wages and salaries figure in the question before you transpose it here. Do you get it? That is what I was saying, that it's advisable you bring the 3 columns. I wanted to bring it directly here, but because I had to do some workings, I did the workings here and brought it here. Yes. Sometimes you see a question and you write prepaid. Maybe wages, assuming it was wages and salaries prepaid. It means that now, this year, the cost of wages and salaries we incurred, we paid it, but we overpaid it. We paid more than we incurred. So which means that amount, we'll use it for next year. The amount we have overpaid will go for next year. That's why we call it wages and salaries prepaid. We've prepaid for next year. But when you look at the heading, they said income statement for the year ended, which means that we are calculating and wanting to find a profit for just that year. So if we are prepaid something, we have to exclude it. Something for next year, we are not calculating for. We are only calculating for things for this year. So the prepaid, you rather subtract it from the actual figure. It's just the direct opposite of this. If it is accrued, we add. But if it is prepaid, you just less it. That is the only difference between the prepaid and the accrued. Now, we bring our wages and salaries figure here. Then that is the last expense we are seeing on our list. We add them up and then bring it here, because finally we want to bring all those expenses together and subtract it from our gross profit so that we can actually get our net profit. So after adding them here, that's why you directly write the figure here. There's no need to really bring it down and give it another name or whatnot. You can just underline it and bring it here. Remember, when you are adding or subtracting and trying to move to the next place, you have to underline once and move it to the next line. So we underlined and brought it here and came to subtract it from our gross profit. That gave us a net profit of 337,000, 337,000 being our net profit.